Today, we're going to be breaking down stocks that you guys have been requesting, and we're going to be breaking down none other than Plug Power, DLO, and PAGS. One is building the future of hydrogen, one is exploding with 46% growth, and one is quietly generating billions in profit, but they are very different companies. Let's break them all down. And if you want more breakdowns like this on companies that you guys specifically request, please make sure that you subscribe and hit the like button below, as I do appreciate the support, and comment below what it is you want to see in future upcoming videos. Now, I'm going to go through each company quickly, what they do, the financials, and what actually matters, starting with Plug Power. We do see that they have bullish projections in the upcoming year. As Prophecy AI, it is Claude, the one that's breaking it down for me. And as of right now, with the price action itself, they currently they've been stagnating, but currently from a day time frame chart, we do have levels of support at the $1.70 range. Now, what Plug Power actually does is they are a clean energy company focused on hydrogen fuel cells. They're trying to replace batteries and fossil fuels with hydrogen systems. They're building a full ecosystem, the fuel cells, power warehouses, and forklifts, hydrogen production, and infrastructures like fueling stations. They're trying to build the entire hydrogen economy. Now, hydrogen is being pushed for clean energy, logistics, heavy industry, and with the financials themselves, when I broke down and looked at the 10K and the annual reports and the quarterlies, their revenue as of fiscal year 2025 was at $709.9 million, which signaled a 12.9% growth in revenue year over year. So far, this does look decent. But that's not taking into consideration the entire picture. Gross margin is negative at negative 34%, and they have an operating loss currently at $1.46 billion. They are literally losing money on what they sell and burning massive amounts of cash. Their cash on hand that they have at the moment is $368 million. Assets are at $2.59 billion, and their liabilities are at $1.59 billion. Now, Plug Power is building the infrastructure for a hydrogen-powered future, but the big question is whether they can ever become profitable. What you need to watch if you are following Plug is you need to check for the margins and how they're improving. You need to check to see if their cash burn can slow down and if they're scaling hydrogen properly. Now, let's switch from a high-risk clean energy play to a high-growth fintech stock. And that's none other than DLO, ticker symbol DLO. Currently, when we look at the price action of the stock, it's very stagnant. It's very odd. And right now, the levels that they're at is at $13.54. What DLO does is they're an infrastructure behind global payments in emerging markets. They help companies like Amazon or Uber accept payments in countries where systems are complicated. And DLO solves all of that through one single integration. Now, some recent news that this company has had is their partnership expanding. Their partnerships are expanding globally, and they're covering 18 markets and expanding across Africa, APAC, and Latin America. Now, remittances are expected to hit $270 billion plus. Now, DLO is positioning itself right in the middle of all of that. When we take a look at the financials after I broke down the annual 10Ks and the quarterly reports for the fiscal year 2025, their revenue was at $1.09 billion, which signaled a growth of positive to the upside of 46% growth year over year. Gross margin was at 36.8%, and their operating profit was at $219 million. This is high growth and it's very profitable. Now, the cash on hand is growing, but currently it stands at $424 million. Why this is interesting is the fact that the emerging markets growth, it's a scalable model, and there's more global commerce, which equals more volume, so there's going to be higher demand for it. Now, the risks that you do have to take into consideration is customer concentration and emerging market volatility. So now we've covered high risk and high growth. Let's look at a more mature fintech, such as PAGS, or PagSeguro, ticker symbol PAGS. What PagSeguro is basically the PayPal of Square of Brazil, focused on small businesses. Their core business is around payments, digital banking, PagBank, and loans and financial services. PagSeguro is building the financial backbone for small businesses in Brazil. And the financials are very strong for the company. Their revenue is at $20.4 billion. Growth is at 8.5%, which signals an 8.5% growth year over year. And gross margin is at 52.49%. And their operating profit is at $2.55 billion. This is a highly profitable company. Their dividend payout is currently at 26 cents per share. So this is a company that is returning capital, not burning it. And why it's interesting is that it dominates Brazil. It has a full ecosystem, and excuse me, and they have strong profitability. The risks that come with it is that there is competition. The competition overall and the Brazil exposure is the fact that you just have to look overall at the competitive landscape of it. They are exposing themselves internationally, globally. It's not the same as like where it's American based. It's somewhere international, somewhere outside of the country. And again, the competition overall, if I'm not mistaken, it is a very saturated market. Now, when we look at how different these three are, Plug is a future bet, high risk with massive losses. DLO is high growth, profitable, expanding globally. And PAGS is mature, profitable, steady. Same market, completely different stories. I want to know what you guys think. Which one of these stocks do you believe in the most, and what do you want me to cover next? Please comment below and hit the like and subscribe button. David with InvestQ out. I'll see you all in the next video.